I think you will. Delta is our top pick on the U.S. airline side, and they actually held their investor event last week, which I would characterize as very encouraging. So among other factors for 2023 guidance, the carrier went from free cash flow guide of $2 billion to free cash flow guide of $3 billion. So with elements of the market questioning the airline recovery, you've got a large airline out there with a 10% free cash flow yield. I think that's pretty convincing. When we look at United Airlines, for example, expecting to be back to pre-tax margins close to the double digits, that's also, I would characterize that as a very constructive signal in terms of the outlook on demand. So, we are constructive about both carriers.
All right. And, we've been talking about the China side. I mean, these guys, they love to fly. And finally, after that surprise reopening back in December, they're starting to do so. Not quite as strongly and in the kinds of numbers that we would have expected. But, what is do you have any visibility on that? Are you expecting Chinese travelers to start rushing out of the country anytime soon?
Yeah, so I think in terms of the Chinese airline space, that's a touch out of my wheelhouse. But what I will say is on the transpacific corridor, we have a proprietary survey. And what we are seeing on the transpacific are pockets of the transpacific really starting to come back. So U.S. to, I think, New Zealand, U.S. to Northeast and Southeast Asia are spooling up towards pre-pandemic levels. U.S. to China nonstop is a little bit slower than the others, and there might be unique factors that could be affecting some of that flow. But when we think about how all of this is going to look over the next year, international long haul is a place we think is going to be the hot markets that airline investors are going to be discussing a year from now, so Trans-Pacific included.